Hello, my name is Clifton Johnson, and I want to welcome you, our viewers in the United States and around the world, to the Empower Series podcast. I'm so excited about today. We're going to discuss navigating the home buying process and a guide to financial literacy and mortgage basics. But before we get into the details, like I do always, if you haven't subscribed to the YouTube channel, please do so now. If you're not following us on our Facebook or other social media accounts, please do so now. And share. The only way people are going to find out about the Empower Series is if you share it with them. So please take the time right now, get the word out. Do not keep us a secret. In every program, we help you by giving you hope, inspiration, education, and connecting you to critical resources to help you achieve your goal. Today, we're connecting you with Angella Jones. She is the Community Mortgage Loan Originator at Independent Financial. Angela, welcome to the Empower Series.
Thank you. Thank you so much for having me. It's a pleasure to be here. And again, I'm Angella Jones. I'm a community mortgage lender with Independent Financial. I come with 20 plus years in the mortgage industry. Helping first-time home buyers is my niche. I have been with Independent Financial for the past 12 months, specifically as their community mortgage lender. Now, what that means is I specialize in low to moderate income earners, servicing low to moderate income and or majority minority census tracts in the DFW area.
Okay. Well, I want to thank you because I know that time is precious.
Yes.
And you're spending a portion of your life pouring into the Empower Series community. So thank you so very much.
Thank you.
I'm going to definitely give you an opportunity to share what you feel is important for us to know about the home buying process, mortgages, etc. But I want to talk to you a little bit about the importance of financial literacy when it comes to buying a home.
Okay.
So talk to me a little bit about that.
Awesome. So financial literacy is top of mind when you're purchasing a home. Buying a home is more than just making a mortgage payment. You do need to be aware of the additional expenses, making sure that fits into your life moving forward as you are a homeowner, and then the repairs and such are your responsibility. Mm-hmm. So I do talk about that with my clients prior to applying and as they move through the application process.
Yeah, so, and we were talking before about the importance of this budgeting, right?
Yes.
And everybody has a different definition of budgeting.
Absolutely.
You are definitely talking to people who hopefully have made the decision that not only do they want to buy a home, but they are able to afford a home, right? And so you do look at, can they afford it? How does someone decide whether they can actually afford a home?
Well, part of that, I am often a part of them finding that decision for themselves. Mm-hmm. Oftentimes, as a community mortgage lender, what is being said out there, I have heard, is if you can afford to pay rent, you can afford to purchase a home. So we walk through that to find out if that is really true for this particular individual. Now, oftentimes it is, but it does sometimes, many times, require rearranging your budget and adjusting priorities. Mm-hmm. Adjusting your needs versus wants so that you can afford not just the mortgage payment, but the additional expenses that go along with that, the property taxes, the homeowner's insurance, the upkeep. There is no landlord to call anymore.
Right.
So,
things,
yes. Yeah. So there are things that need to be addressed, and I help my clients do that in the very beginning and as they move through the process.
Okay, well, I'm going to dive a little bit deeper in this because as a financial advisor, I meet with people often and we talk about budgeting. Mm-hmm. And so everybody has a different concept of budgeting. So I say there's 3 phases of budgeting. Number 1 is have a plan. Know how much money you make, not just on a monthly basis, but also throughout the year. And then know where that money's going. Mm. Because if you're not tracking the income and expenses, which is the basis of any financial decision you make, mm-hmm. then a professional like yourself or a financial advisor are not able to really help them because we're not
Absolutely.
Working on really accurate information. And so budgeting is having a plan. Number 2 is tracking where your money actually goes. Mm-hmm. And then sitting back and reviewing that periodically to make sure, okay, do I need to make any modifications? So when someone comes to you and they're saying, okay, I'm ready to buy a home, I can afford the additional expenses, and I can also afford the mortgage, whatever that is, you kind of help them go through the process of how do you help them match their desires to the reality of how much it's going to cost? That's a process, right?
Well, that is a process, and that is sometimes a series of conversations. Uh-huh. So when you say that customers have decided, or potential home buyers have decided that they are ready to purchase, what I help them do many times, especially as a first-time home buyer, is you may not be ready today, but I can help you get there. Show me your budget. Let's look at your bank statements as to where your funds are going. And many times, you know, the additional eating out as opposed to cooking at home, the additional maybe cut down from getting the personal care items like your nails and such, stretch that out just a little bit longer and add that additional over into your savings, into your house fund. And so that can help them get into a home. So yes, I walk through those processes with them.
You know, I'm glad you talked about that because there's a lot of things happening now when you look at the economy. Interest rates going up, inflation, even though interest rates are trending down now, they're still higher. And then you look at the supply and demand factors of the supply and demand of homes have pushed the prices up. What do you tell people who feel like they're priced out or feel like they can't afford a home right now?
I always say the best time to purchase a home was probably 5 years ago. The next best time to purchase is today.
I love that. I was going to say that too.
Yes.
You're right. You're so right.
Houses trend to increase in value, but also in cost. So even if we have a market downturn, as we had several years back in 2008, I was in the industry at that time, the market has always recovered. If you continue to rent, your interest rate is 100%.
That's true. Isn't that crazy?
Yes, the interest rate is 100% as a renter. So even if rates are traditionally higher than we had seen in the past, in recent years, we are still historically lower than where we were when many of our parents purchased homes, where they were in double digits and with points.
I remember that.
Yes.
I remember that,
Yes.
really. So I think what's really important, and what I'm taking away from this from a financial literacy perspective, is that it's not really that important what the interest rates are, the supply and demand factors of home, because we can't control that.
We cannot.
But what we can control is our financial readiness. Absolutely. Are we saving money? Do we know where our money's going? Are we putting money aside for our values? And if we want to get into a house, are we saving for a down payment? Are we really not eating out and wasting money? And also, are we, like I said, do we just know where our money's going, right?
Absolutely.
So what about, our credit score, that's what I was going to talk about. So getting prepared, if you don't have the best credit, get your credit score higher. So those are the areas I think we can all control. What were you going to say about that? So
there are many different programs out there. Some require higher scores, and some you can get in the door with as little as a 580 mid-credit score.
Wow.
So typically, you'd like to be 620 to 640 for entry into most mortgage programs. There are some that will allow for a credit score of a 580. Now, with that credit score, that does mean you still need a clean 12-month history. Stay on track, pay at least minimums on everything by the due date for at least 12 months. That helps to increase credit score. And then there are other tips and tricks that I work with individuals as they prepare. If you come to me and we pull credit and we find out that you're not ready today, I won't tell you no, I'll say not yet. So here's a plan.
There you go.
And then we work on the plan, and whether it's 3 months, 6 months, or even 12 months from now, I think no one is more than 2 years from ready to purchase a home if you're really ready.
And so what I like is to building relationships. So if you're out there right now thinking about buying a home, the best thing you can do is build a relationship with you. So meet with you and begin to understand what kind of budgeting should be in place, what type of savings should be in place, what you can do to increase your credit score, and key is relationships. And then once you're doing that, you can then assess, is now the right time? 6 months, a year, 2 years? And the other thing you can do is learn. So the biggest thing that people are always concerned about is getting a mortgage. So you can build your education about the different types of mortgages.
Yes.
So what should people know about the different types of mortgages?
So as far as mortgages are concerned, residential mortgages, there are the conventional mortgages that typically are going to require a minimum of a 5%, preferably a 20% down payment. FHA and VA, FHA, those being government loans, FHA requires a 3.5% of the purchase price down payment. A VA, if you are a veteran, first of all, thank you for your service. The VA does allow you to purchase and finance up to 100%. There is a USDA or rural development loan that also requires zero down payment, so you can purchase and finance up to 100%. The property then must be located in a rural area.
Okay.
And your income cannot exceed a certain mark for the area. And I think we'll talk a little bit about median incomes and what the incomes are for particular programs.
Right.
And then most financial institutions that are doing mortgage banking, if they have a bank presence, have a requirement to lend to low and moderate income earners. And what that means is if your income is at or below 80% of the area median, there is a requirement to do those types of mortgages. And there are often specialty products available to be able to help achieve that. So removing some of the barriers, and one of them being the down payment requirement. Right. So my institution, as well as others, do offer conventional mortgages with no down payment. Very similar to VA will offer a no down payment. However, it's not a government-backed loan. So it has some special caveats, but you should definitely seek a mortgage professional to find out if you're right for that type of a program.
So financial literacy is at different levels of IQ.
Yes.
So when it comes to buying a house, you may be good at budgeting, good at investing, good at making certain money management decisions. When it comes to understanding the different mortgage products, they definitely need to meet with you.
Definitely.
And really understand, because with all of those different types of loans, you talked about the difference in down payments, but there's other features
Absolutely.
that we don't have the time to go into.
Correct.
The other thing you mentioned is that if you're low to moderate income, which is anywhere between 50 to 80% of the median income within a certain area, there might be other programs that you can benefit from. But then there's also different areas that you buy a home in that can impact what's
Correct.
available, right? So those are all reasons why it's important, if you're just thinking about buying a home, to meet with you and kind of educate themselves on what they need to know to make a good, sound decision, right?
Yes. So what I try and do, and most mortgage professionals, is they're going to meet with the potential buyers and help them find out what is going to work best for you. Okay. The mortgage that I may, suggest for you may not be for someone else. So as we walk through, what your work history and income and your salary, your plans for the home moving forward, that will help to determine which type of mortgage would work best.
So, and again, there's a number of different financial institutions out there.
Yes.
They all have different products. They have different people. I sometimes relate this to being in a relationship.
Okay.
You need to meet with somebody and make sure you vibe with them.
Correct.
Right. And if you have a bad experience with a professional, don't say they're all bad. Right. You've had a bad date. Some people have given up on dating, but don't give up on dating.
Don't give up on dating.
Definitely don't give up on finding the right financial professional. But if someone wants to get in touch with you, or maybe any representative within independent financial, how do they get in touch with you guys?
So you want to go to our website is independentfinancial.com. On that page, it talks about all of our financial services that we offer in the banks, the commercial lending and residential mortgage lending. I can be found in the residential mortgage page, specifically as the community mortgage lender. Okay. If you'd like to reach out to me directly, my direct email is my name, Angela, with 2 L's, .jones at Angela.Jones at ifinancial.com. So we shortened it for the emails.
And so what's important to know is that all of this information is going to be underneath the video in the description section as well.
Okay.
So if people are just listening and they didn't catch it, they can always go back on either YouTube or Facebook, wherever social media platform, and get that information with links and your email address and stuff like that. So it's really important. Again, I talk about building relationships, finding out, increasing your financial literacy in the area of mortgages and buying a home, the different types of mortgages, what they may qualify for. But the other thing is, a lot of times when you look at down payment assistance, they require you to take some type of class as well.
Absolutely.
So just educating yourself. So what type of education do you guys provide or connect people with from a resource standpoint to get that education?
Very good question. So for most of the mortgage products that I provide, if you are a first-time home buyer, it is going to be a requirement to complete a HUD certified homebuyer education class. I can connect you with either in-person classes, as most down payment assistance programs require in-person, but there are also ways that you can complete that online, and they're free.
Now,
So
all of them are not free, but some of them are free, right?
the ones that are online are free. The ones that I will connect you with, I do have free resources that I will connect you with. Some of the in-person classes do come at a cost, but it's a nominal cost.
Yeah. Which is
And well worth it.
Another value of getting to know you, right?
Yes.
If you want to take some
Right.
free classes.
You want to take it for free, I can send it to you. Yes.
Well, that's good. That's important. So I wanted to talk about financial literacy, the home buying process. The other thing on my notes is, what else should people know about the mortgage process? There's always getting pre-approved or what is it called?
Pre-qualified.
Pre-qualified. What's the difference, and which would you recommend?
So to start off, you're going to get pre-qualified. A pre-qualification, we can have a 15-minute conversation on the phone, and based on what you tell me, if you are accurate in what you tell me as far as your income and your debt, I can say, based upon what you've said, you should qualify for X amount, and I'll break that down as to what the down payment requirement would be, what down payment assistance you could qualify for, all based on a conversation. Now, in order to be pre-approved, prove it. That means
show me some statements.
Right. I need bank statements, W-2s, tax returns, the whole 9 yards. And if I can verify it, then you are actually pre-approved. That means that we put a letter in your hand and hopefully in the hand of your realtor. If you don't have a realtor, we can connect you with some very qualified realtors in the area who specialize in whatever area you're interested in purchasing. But put a letter in the hand that says to a buyer that you're ready. As to a seller that you're ready.
Okay, so pre-approved, that means they've run your credit report.
I've run the credit.
Okay.
I've verified and documented everything you've said. You say, you make X amount of dollars. I need to be able to verify that on paper with an employer.
And it shows that you're serious too.
Absolutely.
That's what it shows the seller.
Yes.
But pre-qualifying, do they run the credit report when you pre-qualify?
So in the initial conversation, you can be pre-qualified without having credit report, but you won't get anything in writing.
Yeah, and the interest rate may vary.
The interest rate is going to vary based upon what you say and where you tell me your credit score is. This is where you should qualify. If you want anything in writing, we can't do that. We cannot do that without running credit.
Okay. So again, I always like to recap where we are. So it's important, if you are having an idea that you want to buy a home, to talk to a mortgage professional and educate yourself.
Yes.
Know your situation, because people can't tell you whether you can afford a home. You have to know where your money's coming from, where it's going, and how much can you really allocate towards the mortgage payment and the other costs of maintaining a home.
Absolutely.
Understanding the different types of mortgages,
right?
And talk to a professional like yourself to make sure that it's more than just the down payment and the interest rate. There's other features involved.
There are other factors.
And there's other costs. So it's closing costs.
Closing
Talk a little
costs.
bit about that.
Okay. So closing costs is the cost of originating the mortgage. There is a cost that involves the appraisal. There's title work. So there's a title company that does search to make sure that when the property is conveyed to you, it is conveyed clean. No one can come knocking on your door saying that I have a lien from past work that was done. There's a survey that is completed. There's an appraisal, as I said, an inspection. Homeowners insurance is paid for at the closing table for the first full year. That's included in your cost.
Yeah.
So it's fair to say that closing costs are going to run on average 3.5% to 4% of the purchase price on top of any down payment that is required.
Okay.
Now,
go ahead.
I'm sorry, but closing costs, that is an expense that can be subsidized by the seller. The seller can contribute, and if it's written into the contract correctly, and again, that has to do with selecting the right realtor who's going to really negotiate for you. But if the seller may be willing to pay some, all, or none of the closing costs, the costs are the costs. It just depends on who's paying it. They're going to run about 3.5% to 4.5% of the purchase price, depending on loan type and a number of factors, how much the taxes are and all. But the seller can contribute and pay some, all, or none of that, but that's what they average.
Yeah, and so when you talk about down payment assistance programs, there are cities, counties,
Absolutely.
Sometimes even financial institutions that provide some type of program that you have to qualify for, right? So there's all
Correct.
qualifications. So it's important to take the home buying course to increase your knowledge and just make sure that you're eligible
Correct.
in that requirement. But then you got to look at probably where you're buying your home, what your income level is, and just explore everything to make sure that you're getting all of the free money to help you get in. Is that correct?
Yes, that is correct. And that's why choosing an experienced mortgage professional is key. Because an experienced mortgage professional will look at that and filter you through, okay, what you may or may not qualify for, depending on the cities that you're wanting to, you're interested in purchasing in, and say, well, this city has some money, but you're a little over the qualification, or you would fit right in the box. We can add that. But typically, a city is not going to allocate down payment assistance until you have an actual property.
Right.
But it is key to have a mortgage professional that knows what the criteria is, so we don't get down the road and say, oh, no, you don't qualify.
So what we've done is we've partnered with other organizations like Money Management International. They provide a HUD certified home course. There's the FDIC Money Smart program.
Yes.
They have a free do-it-yourself course on home buying. We also partner with the city of Irving and the city of Dallas to have that representative come in and talk about their down payment assistance program to make sure people know about it. Because at the end of the day, I believe that there's underutilized resources.
Absolutely.
People just don't know.
People just don't know.
And they're not building relationships. So I'm also looking forward to us partnering,
Okay.
right? Because we normally in June do a workshop on home purchasing because it's National Homeownership Month in June. But in looking at the calendar in my birthday month, September 19th, we're going to work together and do a home buying course where you're going to be a part of that.
Yes,
And so
looking forward to it.
I'm really excited about that. I want to know, though, in addition to you providing the expertise in mortgages, what else does Independent Financial do in the community just to help people be prepared, increase their financial literacy that people are not aware of, that you feel like they should be aware of?
Well, Independent Financial has made a significant commitment to helping to foster home ownership. So in doing that, we foster with several nonprofits that are focused on affordable housing, and some that also focused on financial literacy. Now, my partner will come in and give you more information and more details. But I do participate in home buyer education, as it's often given through nonprofits. And then that's partnered with banks to actually come in and facilitate, and I am one of the facilitators at several nonprofits as well.
And you partner with people like
I
us,
do,
right?
I do.
So I am so glad that you actually took the time. We do have some questions, though, that people have asked. I want to make sure that I'm covering everything. So we talked about down payment and people needing to save. Do you have any suggestions? Have you given people, in addition to not getting their nails done, right, or not going to happy hour, if, you can stay at home and watch the game? Do you have any advice around how people can actually save for a down payment?
Well, it's all in just knowing where your money is going. So as we work through the budget and your gross, which is where you qualify for a mortgage, versus your net, what you bring home, where can you find that additional monies that's going to help you to be prepared to purchase? Just some of the ways, yes, is not eating out as much, but there are also, you can earn additional income and add that to your savings. And I say, as you prepare to move, look through and what can you sell? There are, platforms where you can sell your clothes that you no longer wear. You can, sell your kids' toys. There are ways to come up with additional monies. Now, it may not count as income as far as where you qualify, but it's going to help fill that piggy bank to get you ready to purchase.
And it would get rid of, create some space.
Right. It creates space, and it's less to pack and take with you.
Most definitely. And also, there are different programs that can help with down payment assistance, but if you have saved money aside, there's also some additional costs when you move in. Like you gotta get window draping and other things that you may not have been responsible for when you were renting. And so saving and having the muscle of saving even after you get into the home is is very important.
Absolutely. Absolutely. And some of those window coverings and such, that again, a good realtor can help negotiate that in. If you're purchasing existing, even if you may not be in love with the window coverings that they have, if you keep them there until you're able to save to buy what you want, that is a savings right off the bat.
Right.
So that's, and then builders sometimes will work that into the purchase price as well. But yes, we go over all of that.
And you touched on this a little bit about credit score.
Yes.
But if someone really needs help improving their credit score, repeat again, what type of services or resources can you connect them with to help them improve their credit score?
So we have an in-house program that is free to the consumer. So it is a real credit repair. We pair you with a counselor, a credit counselor. It's at no cost to the consumer.
Repeat that, please.
It's at no cost to the consumer. And it is real help. They will help you to look through your credit report, see what needs to be done to find the points that you need in order to move forward, and help you, stay on track as you make those steps. But it costs nothing. Now, it's not a free service. We actually pay for it, but it's because we're invested in helping to increase homeownership and trying to help remove some of the barriers.
So I would reiterate this. I know a lot of people are out there, they hear about the free credit repair companies out there that would charge you. And look, there's nothing wrong with people providing a service and getting paid for it. But if you need to improve your credit report, and if that's the case, I'm already thinking that you probably don't have an emergency fund set up for 3 to 6 months of your living expenses. You can probably pay more towards getting out of debt, right? Why take that money and pay somebody else when you can get services at no cost to you?
At no cost to you.
When companies like yourself or either other nonprofits are going to teach you and give you the tools to improve your credit report. So definitely, I think that in and of itself, whether you buy a home or not, is worth,
it's worth its weight in gold, because your credit score dictates how much you pay for so many things that people are not aware. Your homeowner's insurance, your renter's insurance, your car insurance, all of these things are tied to, everyone pulls a credit report.
Exactly.
And so if we can increase that score, that's going to save you money.
Okay. And then interest rates. We talked a little bit about the fact that interest rates were going up, inflation. It affects the cost of a home, or how much of a home you can buy, for a certain price. How much of that should be in the decision of either buying a home or not? What are your thoughts on that?
Well, if you are renting, you're paying 100% interest, meaning that there is no equity. You can live in that rented space for as long, 3, 7, 10 years. I've seen even longer, and you have absolutely no equity, and you've paid X amount. So as rates are a little higher as they have been, they're less than 100%. They are trending downward from the peaks where we hit in the 8s a little, I guess the beginning of the year or so. But and some specialty products, if you catch it right, you work with the right mortgage professional, they can help you get something that's significantly lower than what's trending. Even some specialty products have lower rates. So I say date the rate, marry the house. Date the rate. You can always refinance it once the rates, if the rates we ever see those 3s and 4s, which I don't know that that'll ever happen. Don't wait for that.
But I'm with you on the standpoint, we don't know the future.
Right.
But if you getting into a home now, the equity growth,
correct,
in most cases will exceed the cost of borrowing money to buy the home.
Absolutely.
In most cases it will.
In most cases.
So getting in now, as opposed to trying to wait for an unknown time where interests are going to go down and the prices of homes are continuing to go up.
Values are going to continue to go up.
Right. So, and we talked about closing costs. We talked about the pre-approval versus the pre-qualified. Home affordability. Do you guys have calculators to help people kind of put the numbers together to figure out what they can afford and what?
Yes.
How does that work?
So actually, there's a link on my website. So you can see that on my website. But what I do in a 15-minute conversation is, if you tell me your gross, you definitely don't want to pay, at the maximum 35%, more than 35% of your monthly income towards your housing expense.
Okay.
Now, there are other factors that go into that, but you have to factor in, what you're paying for things that don't appear on the credit report, and that's what you as the consumer have to be aware of. But if you would keep your housing expense to 35%, some programs will allow you to purchase more, but you need to know, what that means for you specifically.
Okay. Okay.
But 35% is a good takeaway is a good goal to keep in mind.
Okay.
So your monthly income times 0.35, if you set that aside, that's probably close to what you're paying for rent.
All right. And then here's the other thing. We talked about homeowners insurance, but what about home inspection in the process of closing costs? Or
Yes.
just in the process of just inspecting your home and making sure you're not getting a limit, right?
Absolutely. So, as a part of the buying process, you have gone through the pre-approval process. You have the letter in hand. You and your realtor make an offer to a seller. The seller says okay, and you have a period called an option period, where you go and you inspect the home to make sure that it is everything that you think. It's not just lipstick on a pig.
Right.
So you will hire, and the real estate agent typically is going to connect you with several home inspectors, and the inspector is going to crawl up into the crawl space. They're going to look behind, pull wall plates off, the things that you and I don't think to look at. We're going to see how pretty it is and what color it is. But what an inspector does is they look at the roof, they look at the shingles, they look at the foundation, and then provide you with a written report to know everything there is to know about the house for you to make an informed decision.
Well, I'm glad that you kind of explained that, because when you look at buying a home, there's some places that the inspector will go that you're not going to want to go.
Absolutely not. I'm not going in the attic.
And you also, we talked about a lot of different things, but the last thing I'll ask you, you talk about the importance of a real estate agent. If you don't have one, you'll connect them. So talk about the importance of that, because a lot of times you're hearing about the value of a real estate agent. Are they really important? What, in your experience, what do you think about using a real estate agent?
Absolutely. A seasoned professional realtor is important. And what that realtor does is not just provide you with the key to open the house and show you the home. That realtor is your negotiating power. Because the realtor, this is what they do for a living. This, buying a home is the biggest investment that most people ever make.
Yeah.
And at most, on average, maybe 2-3 times in your in your lifetime, where a realtor does it day in and day out. So they know the questions to ask, how to ask for closing costs, how to ask for concessions that's going to help you move forward and keep money in your pocket.
Yeah.
So definitely, I would always choose a seasoned realtor.
Okay. And so when you look at building a team, we talked about relationships, meeting with someone like you first if they're thinking about buying a home. So you've got a mortgage person, you got a real estate agent, you got an inspector, you have a home insurance agent, possibly a financial advisor.
Yes.
Did I miss anybody else on that team?
So behind the mortgage professional, there's a processor, an underwriter. There's an entire team that sits behind me that I am the front face of. There is also an appraiser. So an appraiser is different from an inspector. They are inspecting the home for value. And unless there is something that's blaringly wrong with the home, there's a big crack down the middle, the appraiser is going to mention it. Other than that, the appraiser is not looking to make sure that the electrical is done correctly unless, it's blatant. They are valuing, so the appraiser works for the lender to make sure that as I lend you money, or as that the home is worth what we're lending.
Right.
So, that's an important factor as well. And I do recommend that the realtor is present when the appraiser shows up.
Okay, right. Okay.
So you want your realtor, so that's why you want someone, a professional on your team that's going to work on your behalf, that they will give information to the realtor even prior to getting it to you or to me as the lender, that says, hey, there could be a problem with, hey, ask about the, the age of the roof, because this doesn't seem to line up with what may be on the seller disclosure. They are on your team.
Well, I'll tell you right now, we can talk probably for another hour. But we did cover a lot of information. That's one of the reasons why we're recording this. So definitely people should look at this over and over again, share it with other people. But to kind of summarize this, and I also believe that the Empower Series wants to inspire people to take action.
Yes.
So if they just hear this and not do anything, then we're not really doing our job. So we really talked about the importance of building relationships.
Yes.
And increasing their financial literacy knowledge. So that means, number one, you should go into a bank and develop a relationship with your banker
Start,
and the other
yeah.
professionals there.
Correct.
To really, 'cause if you're putting your deposits in the bank and you don't really know somebody, like you're not putting the eyeballs on somebody, then you're missing an opportunity, right?
Definitely a missed opportunity.
So I would say number one is, wherever you bank, going to a bank, where is Independent Financial? Where are they located within the Dallas-Fort Worth area?
Well, we have several locations. We are considered a smaller regional bank
Okay.
at this time, and we are looking to open a branch down in the southern sector, down in South Dallas. Right now, the most southern branch is on Live Oak.
Okay.
We have offices in McKinney, and Denton, in Plano, and a couple sprinkled throughout northern Dallas.
So the first thing is to walk into your bank, and
Yes.
especially if they haven't walked into Independent Financial Bank, they should definitely walk into the bank.
Their bank.
And develop relationships. And then also, your information is going to be below the video.
Okay.
So they can reach out to you directly. I'll give you an opportunity to share your information again.
Okay.
But I would say build relationships, number one. Number two is really tap their mind. Get the information that you need to get. Learn what you need to do from a budgeting perspective. Learn what you need to do to understand the home buying process by going to a HUD certified course. Attend our workshop on September 19th, right?
Yes.
And so information on that is on our website, and I'll give that information later. But build relationships and understand as much as you can about the home buying process. Right?
Correct.
What else would you add to that as to what you would like people to do as a result of watching this podcast?
I would like for people to take a serious look at their own budget and see, are you spending your dollars in the best way that's going to not just help you today and help you to survive today, but are you building wealth for the future? And how you may start doing that if you're not already.
Yeah, I think so. What's cool, that's going to help people no matter what they do.
Yes.
Right?
Absolutely.
And so I really appreciate, again, you taking your time out of your busy day and out of your life to be with us.
Absolutely.
My intent is that we've given people hope that whatever their dreams are, whatever they envision, they can achieve it. We've inspired them to take action. So they're not just going to sit there and go like, oh, this is good, next.
Right.
You definitely educated us,
Swipe.
myself. Right, swipe. But also, more importantly, connection to resources. So I said that your information is going to be below the video. But again, for people who are just listening, what's a good way of getting in touch with you and continuing, stay connected with you?
Staying connected with me, I would say my email is Angella, ANGELA.Jones@ifinancial.com. If you send me an email and say that you're interested, I can provide you with as much or as little information as you're looking for, but I can provide you with those tools necessary. Or you may go to the website for the bank, and that is independentfinancial.com.
So do not sit on this, right? This is not the end, this is the beginning, right? So definitely connect with Angela, connect with the Empower Series. If you have any questions, you can email thrive@empowerseries.com, THRIVE@empowerseries.com. Make your comments. If you have any comments below the video, I will respond to them. You will get your answer or send me an email. But like I said before, don't sit on this and don't keep this to yourself. When you learn something, you teach it. So share it with someone else.
Yes.
Share, subscribe. Let's stay connected. So I want to thank you for spending the portion of your life watching our podcast. And our hope is that you have been inspired to know that your dreams can come true. You're going to take action. We've educated you, and now you're connected to Angela and me, and we can help you take that next step to achieve your goal. So thank you again. Until we meet again, be empowered and inspired to thrive.
Thanks.